After much research, I've come to the conclusion that insurance company stocks look to be a great investment for growth and dividend payout. Insurance companies do well in all economic climates, good times and recessions. Insurance companies make money by selling insurance policies. If the income from a policy is greater than the payouts, they are in profit. A less well-known way that insurance companies make money is by investing the money they take from premiums before and if they have to pay this out in claims. This money is known as float. Some insurance companies invest in safe investments such as government bonds. Others invest in more speculative type of investments such as stocks. And some insurance companies are very large holders of stocks in other companies. Warren Buffett, from Berkshire fame, Berkshire Hathaway, owns an insurance company and is a great believer in insurance as a good profit-making cash flow stock mechanism. I personally have had business dealings with owners of 2 insurance companies in the last few years, and it was obvious they were very wealthy. So there's obviously money to be made in insurance. Here are the 3 metrics that just apply to insurance companies. We've got the loss ratio. This is the percentage of the premium taken that are paid out in claims. For example, £100 million premium taken over a year and £70 million claim payout. This has a loss ratio of 70%. The expenses ratio, this is the percentage of premiums the insurers spend to run its business. For example, the company takes £100 million in premiums over a year and £20 million are used for expenses. So the expense ratio is 20%. The combined ratio, this is the loss and expense ratio added together. £100 million premium, £90 million loss and expenses, the combined ratio of 90%. A combined ratio of less than 100% indicates an underwriting profit and shows a good risk management. But bear in mind, the companies also make a profit from using the cash they have before they pay out in claims for investments. Other metrics are also used when checking out an insurance company, as you would use for companies in other industries, such as I use the PE ratio, price to earnings ratio, and also the PB ratio, the price to book ratio. The 5 main categories of insurance companies are property and casualty, P&C. The insurers write insurance policies that cover property damage and liability protection, such as car and homeowners insurance, and landlord's insurance and pet insurance. This is the easiest to understand and most popular type of insurance. Then there's life insurance, which is quite easy to understand. It takes a policy and it pays out a sum of money if the insured person dies within the terms and time scale of the policy. Health insurance, this covers healthcare costs. Very important in the USA, not as important in the UK as we have the NHS. but many companies and many individuals who can afford it do take out private health insurance, and this enables them to supplement the benefits of the NHS, such as it's a word they don't like people to use, is queue jumping. You can get to see a specialist quicker, and you can have a choice of when you have your treatments done. Then there's specialty insurance. This is when a situation is not the norm and is required to be insured. Very high risks, such as very high risk situations. For example, specialist demolition of buildings, properties that are liable to flooding. Then there's reinsurance. This is the insurer's insurance, where the insurer buys an insurance from another insurance company to cover them for very large claims. So they're spreading their risk. These claims may arise if caused by a natural disaster, which possibly could happen but very rarely does, but the claims could be phenomenal, or events where many people may be injured. So they are spreading their risk. I've already invested in 2 UK-based insurance companies using the free trade platform, and that is Aviva and Legal and General. Both of these companies have great growth potential and good dividend payouts. My plan is to further invest in insurance companies and closely monitor their performance while I'm earning good dividend payouts and taking an upside profit as and when the stock reaches the predicted price. So insurance companies, I've done the research. I think a lot of people who are involved in insurance are very wealthy, and it's now my turn to get a slice of this, and I'm doing it the easiest way possible, and that is by investing in insurance companies. I've already done 2 videos. You can have a look where I've invested in Aviva and Legal and General, and I'll be doing some more videos when I invest in other insurance companies, explaining why I've invested in them, and I'll be giving regular updates. So we'll be going in quite deep on our new project, and that is investing in insurance companies for good upside and dividend payouts. Hope you found this interesting. Until next time, I bid you a really successful investing adventure.